There are 1,000 reasons why the market would be up today if it were up right now. And what's this? It will either move up or down at any time. Yeah. And if you guys heard that for the first time, start paying attention to it if it's something fresh. When there is a lot of news out there and you notice big up days, big down days, or neutral days, you should start paying attention and say, oh yeah, this doesn't make sense and it doesn't matter. If you're new to viewing, just start focusing on those minute details. So, consider Tesla. Tesla has risen today. It has decreased by 48% in the past 3 months. It was down 50% over the previous 3 months at one point today. In just 3 months, I increased by 50%. The highest point is 404. And at that time, only, and we believe that this company should reach a price of $50 or $60 before falling 50% in a short period of time. That simply looks so overstated when I look at it. I want you to hear me out on that. Listen, in the investing process, there is a question about what this product is. Why do I wish to purchase this item? To possess it for a long time. The other aspect of investing is that, simply put, I lack Tesla. I concluded today by remarking that this seemed excessive. There must be some form of recovery or upswing. It just appears to me that it has been overdone. Possibly a little. I started a fresh short position with calls that were staggered slightly differently so that I could buy, lock in my profit, and then adjust my position to reduce risk on the downside. Great. I secured some gains, but I have 48% confidence in myself after around 3 months. 18% in 1 month. 10% for 1 week. Yes, it is a little oversold. I mean, come on. Overvalued companies may yet experience the bounce. And I ask myself, do I believe this will go any further? Yes. Tesla is not currently a $187 corporation in my opinion, but that doesn't imply it won't be in the future. The query is, we must consider what the future holds and how we can finance it. Now, if you believe in the U.S. economy, all of these news reports concerning the market's direction based on this information and that information are just noise in my opinion. At supper the other night, I overheard someone say, well, Paul Blackstone agrees with you. The economy is about to collapse. Never have I said that. I support the economy wholeheartedly. I'm one of the few people that doesn't believe that the housing market will collapse. Do I anticipate price reversals and perhaps even price stability? Yeah, it is now apparent that the pricing will be reduced. It won't be a crash like the one we witnessed, in my opinion. 607. I don't think that can be incorrect. Of course, it might be inaccurate. Do I think the U.S. economy will be stronger in 10 years than it is now? Absolutely. Do I really think inflation is as bad as everyone makes it out to be? No, I believe that over time, inflation will benefit things like stock market valuation and businesses. And I believe that's a crucial factor. You just claimed that over the long term, people consider inflation on a daily basis. It really is bad. And I realize that everyone among you is currently experiencing inflation. And certainly, it directly impacts everyone. Some people are more impacted by it. You either have a fixed income or a lesser income. I comprehend. But if you look at the long term, at 10, 15, or 20 years, as I do, everyone claims to be a long-term investor at least until they suffer a loss in the near future. This channel teaches you how to take advantage of temporary setbacks to create excellent long-term investments. The key there is that, additionally, it takes a particular mindset and emotional toughness to be able to state that while markets are down, it's a good thing because the U.S. economy is here to stay. Yeah, that may be challenging, but that is the situation. You observe. You benefit from reading and repeating the process. It's very terrifying when you see this. I avoid it as soon as I notice it on my account. I am a human, yes, such as you people. I stay away from stocks that are declining, but I also need to take a step back and consider whether I really want this. Well, I have faith in this business. I reran my calculations. Assuming my thesis remains the same, Mr. Market's emotional ups and downs don't affect me. It's my responsibility to respond to that by acting as a buyer or seller. And if you folks think that makes logic, I implore you, you will leave the channel with a greater grasp of money and investment if you subscribe and watch more videos. Because of the one difference between now and when we launched this channel 2 or 3 years ago, I believed it was all about the stats back then. And I think today it's all about mindset and feeling. 90% of it is mentality and emotion. Even if you have no financial background, you will do really well if you can continue investing and raise your assets when stock prices decline and purchase inexpensive ETF. We have a community if you're thinking about the proverb, I don't have someone in my life to talk to about this. It has no risk. If after 30 days you decide you don't like it or don't believe you are benefiting from it, you can leave, but you must get your money back at last. You'll get your money back, but you'll also have access to others who share your viewpoints because I didn't have anyone to talk to before you on a daily basis. Oh, right. I now have a large population to converse with, so yeah. And we discuss each of these topics. Also keep in mind that thought and emotion play a role in investing. In our community and on our channel, there is a reason. Every day, I post a quote that speaks to me and illustrates how it applies since that is what it is all about. By the way, even in our neighborhood, people ask me, Paul, what do you think the Fed's going to say tomorrow? What impact will it have on stocks? I am clueless. And to be completely honest, I don't care because interest rates were already too low in my opinion due to inflation. So, in my opinion, we're not even close to the 10-year Treasury, which is 3.635. The typical value throughout time is 4.5 or 4.4. Therefore, we are still approximately 1% away from that. For me, the benefit of rising rates is the ability to sit on cash while earning 4.28% in Treasury. Not awful at all. Yes, that's actually quite good. Not at all awful. Then that is what? Everything depends on how you view it. And we're attempting to present another viewpoint on how to view the same data. It may sound like fear-mongering, but my perspective on the future is considerably more upbeat. Do I believe the U.S. economy will expand over the next 10 or 20 years? Based on that, can I pay a fair price for the businesses today? That's all I have to say. Now, do I believe the cost now is fair? Not at all. Will there, however, be a fair price? Absolutely. And on it I'm mainly focused. Wait till everything is somewhat more under control and there is a fair price. Too much money is being chased after too many bad deals. And I don't like that you can see it today with all these businesses that are now being operated by men who are scammers. So, where were the questions prepared beforehand? We are posing the query in advance. We were charged with being pessimistic. We're not pessimistic, simply preparing the questions in advance. There are many outstanding businesses out there, and I act in ways that are substantially distinct from those of all value investors. There are many excellent businesses out there, and I can see how they can justify their current prices, but I'm not buying because I believe the market will decline, and I'm happy to wait for it. Might I be correct? I might. The fact that Mo does this in his neighborhood is another reason to join if waiting to acquire a stock at a reduced price at a later time makes sense to you. So, men, be tolerant. The markets will rise and fall, and the tails will merely follow the markets as they do. It will argue, well, the markets are up, but it shouldn't have been. When the markets are up, it will declare, Stuart, Margaret, as a result of Joe Biden's fantastic bowel movement today, without paying attention to the long-term fundamentals, there are just all these arbitrary excuses. And to me, valuations and GDP growth are related. As long as you can handle the market's ups and downs, if you stick to those two principles, you'll perform very, very well. To become a channel subscriber, you can understand this now. If it doesn't, it might do so later. But typically, someone appears. We must elaborate. That is the course of my adventure. There has to be a way to explain it. I thought when I was unable to explain why stocks dropped by such a large amount, I then discovered value investing. For me, that was the beauty. I'm hoping it works out for you. Thank you very much.